This week we're going to take an updated look at U.S. crop condition ratings as well as crop progress. Then we're going to take a look at the short-term forecast as we look at the weather for the last half of August. We're going to wrap things up looking at the latest trends in December corn futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the corn market. We've moved into the last half of August here, and once again, this market remains historically volatile. Let's start out this week looking at the latest trends in crop condition ratings. Our usual map here shows the good to excellent ratings, improvement depicted by the green circles, deterioration noted by the red circles, and unchanged by the yellow circles. This latest week we did see a 1% decline in good to excellent from 58 to 57%. That's now notably below last year's level of 62%. We did see some improvement in some of those northern states, notably Minnesota, Wisconsin, Michigan, as well as Indiana. However, deterioration this week was noted across Illinois, Iowa, Nebraska, as well as North and South Dakota. Let's now take a look at our updated crop condition index. You can see it rests now at a season low as we enter the last half of August here. I want to take a moment, though, to reflect back on what we talked about last week, and that is looking at the relationship of this year's crop condition index and final yields compared to recent years. I want to reemphasize again, the crop condition index holds some relationship to final yields, but it's not a perfect fit. For example, we did see crop conditions decline notably between 2018 and 19, and the yield declined. But notice again, in 2021, the crop condition index was below what it was in 2018, yet the yield was slightly higher. I still think the impact of technology and farming practices could have an influence on these 22 yields. We'll just have to wait and see. The key message, though, is continue to manage risk with your trusted ATI risk management consultant. Let's now move forward and look at crop progress here. We're looking at corn dented. We're looking at now 16% of the corn is dented as we move into this second half of August. That's slightly below the 5-year average of 20%. Over the next 2 weeks between now and August 28th, another 32% of the corn will be dented, which will put us near 50% of the crop dented as we enter those last few days of August. Of course, the progress and condition of this year's crop will be directly related to the weather. Let's take a look at the short-term weather trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out with a pattern that's welcomed as the last half of August begins here, and that is cool weather all across that light blue area. The exception would be in the northern plains where it's be closer to normal. Now there may be some increases and decreases in those readings during that time period here, but for the short term it does look like it's going to remain cool. Now let's look at rainfall. Basically looking at Thursday through Sunday here. The light green areas are looking at anywhere from 1/4 to 1/2 inch. Now those pink areas are a little heavier rain, 1/2 inch to 1 inch of rain. Again, from Thursday through Sunday of this week. Now we're going to look into next week, August 22nd to the 24th. We're looking at some heavier rain here in the south. As we move up north, maybe 1/2 inch, and that pink area would be about 1 inch of rain. So it does look like there's going to be some rain, and that's being reflected in this market weakness that we've seen the last week. Now let's look at the next 14 days on total here. The driest area is up there in the northern plains, but as we move south and east here, we're looking at normal to above normal precip. So again, this is what's been weighing on the market earlier this week. Let's wrap things up this week looking at trends in December corn futures. Now December corn, after bouncing up briefly on Friday following the USDA supply-demand report, has retreated back down to about $6.10 a bushel here as we tape on Tuesday. That's still $2 above the 5-year average for this time of year. We strongly encourage you in that light to continue to work closely with your trusted risk management advisor to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 800-664-2321. We'll put you in contact with one of our risk management consultants who will be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an upload. Thanks a lot. Have a good week.